Good morning. It's Friday, March 7th, about 6 a.m. Central Time. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So, a lot of people ask me about this volatility in the market. It's really a trader's paradise here, especially for short-term trading in both directions, on the long side and on the short side. Really, regardless of what commodity, what futures contract it is, you are seeing some small intraday bounces here on the S&P 500. If you go to a 5-minute time frame on your chart, throw up average to range, you're getting about 15-point bounces back and forth on each side. So 15 points on a mini S&P is $750. On the micro, it's going to be 75. So choose wisely as far as contract size. So the market has really become fixated on these three different narratives. It's the tariff threats, the uncertainty about inflation, and then equity valuations. And those valuations are what caused a reset on a lot of the individual stocks, weighing in on some of these equity indices here. So what's the solution? Really, for people, they're reducing their holdings, they're hedging, and they're starting to diversify. And what everyone's watching on the equity side is that 200-day moving average on the cash S&P 500. The thing about moving averages is they do have a limited shelf life. You trade above them for a while, you bounce over them, then you get below them, and then that becomes overhead resistance. So we're going to really need to see if the buying activity really overcomes the selling pressure, and that's where you get the turnaround in the equity markets at some point in time. Oftentimes when it looks at its gloomiest, that's when that is that opportunity to add for long-term positioning. So I tell a lot of people, when markets are under pressure, is that you want to focus on your long-term objective, and has that changed here as U.S. equities have returned 8 to 10% annually on a long-term basis here. I know it's futures trading and it's shorter term, but that was just some thoughts here that someone asked me about, so I figured I'd get it to them right away. So let's get you ready for the trading day. Let's turn our attention to the jobs report at 7:30 a.m. Central Time. So the expectations are for 159,000 jobs created versus last month's 143. Now, if you look at Wednesday, we had that ADP report came out half as much as what was expected. It was like 77,000, and the markets didn't like that at all. So we want to see a number that's in line with expectations or better. The unemployment rate flat at 4%. You're going to have Powell speaking at 11:30. You're going to have Trump speaking at 12:30. So it's going to be another volatile session and another roller coaster. So overnight, we did see an announcement of a strategic Bitcoin reserve, but the disappointment came as no new purchases of Bitcoin. Basically, what they're doing is anytime they arrest criminals, hacking, things like that, they're going to take that, they're going to apply that. And it just makes sense, because if they're cutting costs everywhere, why are they going to buy Bitcoin and things like that when they're trying to reduce their spending, even though I know it's an asset and everything else? It just doesn't seem like it's in the cards or the agenda at the moment here. So no new purchases. You get the sharp decline, you get a recovery. Saw a lot of traders, a lot of people working with us here. They were dip buyers. They picked up at 85,000 on that March contract. Now the contract coming up to 89,000. So congrats for people to do that. We'll see if those people unload, or if the market's going to sell back off here. So, but I did see a lot of fills on Bitcoin overnight. So looking at the precious metals overnight, kind of flat here. They started the overnight session a little bit stronger here. Now they're giving up just a few of their gains. You got the gold futures flat. 29.3120 being the high, 29.26 last, 29.05 is the low. You look at May silver, 33.15, down about 18 cents, and the low of the session, 33.07. You got copper futures running into resistance at 480. Now we're 476. Low of the overnight session, 475. Platinum futures were making a new high when I was, drafting up some of the notes and research for this at 987, but now they're on the low of the session at 972. And then you got palladium essentially unchanged, and the gold silver ratio at 88 to 1. So nothing really big there. Something to note on the precious metals is that during the day session, the US sessions, we've seen a few different things, and these are some observations that I have, is that we've declined, and then we've come back and we've essentially finished the day unchanged. And where is that buying coming from? Well, it's in the ETF flow. So exchange traded funds, they added 153,000 ounces of gold in their last trading session there yesterday. It brings this year's net purchases up to 3.2 million ounces. The ETFs, they also added about 240,000 ounces of silver, and that brings this year's net increase to 975 million ounces. So you got copper futures up 5%, as well as silver basically on the week. It was copper that really led the charge here. Palladium up 4.5%, platinum up 3.8%, gold up 2.8%. So gold, the thing about gold is that it's on track for another weekly gain. So it's been up about 9 out of the last 10 weeks here. Last week's big sell-off left me quite uncomfortable, but we did have a lot of people coming in, adding to positions, buying down there. Now with futures kind of running into the resistance, the question is you look and you see where the all-time high is on the chart, you see the sell-off, you see the recovery. The problem with the recovery we're having is that we're running in a resistance in the 930s, and we're not going out. We're not at least making a double top or retesting that 954 to 970, the all-time high. We're slightly lower than that, and it opens a door where if the market did break below 2900, 2885, you could see a lower high on the charts, which is not very supportive. A lot of people are shorting the market, things like that. A lot of people are taking positions off. They are buying puts. They're getting quite defensive. Now, the thing about short sellers, and I had this conversation with somebody yesterday, is that people always attack short sellers and things like that, but you got to look at it. Everyone's got their own objective or agenda when it comes to trading in the metals markets. I've been a futures commodity broker for about 25 years. I started at Lynn Waldock when they were bought by Refco back in the early 2000s, and at that point I've always been a precious metals enthusiast. And many of my clients, we were buying silver when it was like $4 to $6 an ounce. I remember when it got to 8 and 10, and when it was down at $4, $5, $6 an ounce, I had a lot of people taking delivery of those contracts and things like that. And you look at where futures are at now, well, they've 5x'd, and people who bought at that level and they have a substantial amount of their net worth tied up into it, of course they're going to be hedging silver at $33 and taking shorts and things like that. It's the people that got in the 20s where they're looking for the $40 to $50, and at $40, $50, they're going to be selling and things like that. They might be short selling and protecting their position. So it all really depends, and it's really independent on when a person got involved with the market. I really started my accumulation as far as contracts and warrants and things like that personally when we were about $13 to $15. So for me, it's just a double here at this point, but it's not necessarily, life-changing by any means. So just a little bit of discussion about that. Now, copper, again, it's what caused the surge. It was when Trump said that he implied a 25% import tariff on the metal. Copper futures go up. You got China. They come out with a new initiative to hit their 5% growth target, increase spending, things like that, really shore up their economy despite the tariffs and everything. Copper's futures surged about 20 cents at one point this week, running into resistance at 480. Really need to get a strong close here, and then you can see that upward move to probably about 515 or 520. Not a recommendation, just an observation, as everything is on this channel here. So checking in on the outside markets, U.S. equities, they are a bit stronger here. 57.65 on the S&P, up about 19. NASDAQ up about 100 points, Dow up 85. But all this is going to change dramatically once you get that jobs report coming out. Something to note, the dollar index it is approaching a big support level, which is about 103. And if we do get a bounce on there, how will it impact the metals market? So just something to keep an eye on there. So it's really, when it comes to the equities, it's Trump's kind of on again, off again tariff strategy that's really causing the volatility in the markets. When, if you were to, sit next to me during the trading day, I got about 3 different squawk boxes going on, and all it does, it's like a robotic voice that rattles off anything Trump tweets, discusses, any president, prime minister, anyone globally mentioning of importance, tariffs, trade policy, interest rates, things like that. And then I immediately see the market react within, a split second after. So it's those reversals, the faulty rollouts, the confusion with U.S. trading partners, especially with Mexico and Canada, and then the hard stance on Europe and things like that, that just really causing business uncertainty, these impromptu announcements and the shifts on dates and targets, pushing it out a month, this and that. It just causes the volatility, and a lot of people get chopped up in the markets, and you get that 15 point move in the S&P in 1-2 minutes. So the confusion, it just leads to the market volatility, and then the equities, they take a beating. Consumer confidence, as far as confidence within people, it starts to erode. So again, I'm watching that dollar at 103. shift into the ag markets. Nice bounce yesterday, giving up a little bit of gains here today. Something to note about the grain markets is that they had an incredible run up just recently, right? Coming into like Trump being elected and things like that. Those markets come up and then they sell off pretty big. A lot of farmers probably didn't hedge or get their full hedges on there, and they were regretting it when we had this sell off here, especially this very sharp decline in the ag markets. So when you get up, you're going to have some hedging pressure coming in the markets here. So when you get profitable on your agricultural positions, if you're working not with me or working with me, but not like someone with my partner like Oliver who specializes in the ag markets, what I'm saying is we take this from a tactical standpoint. We get up, we trail stops, we pick and prune at our position here, and we take some off and things like that, as far as trying to harvest some profits from these upward moves here because of that upward hedging pressure coming in the market. So I'm just telling you, trail a stop, try and take some profits on some of the positions, that's all, because most of you guys are focused on the metals markets. So shifting to the energy markets, because that's one that has been one of my favorite markets here, crude oil. I think that it works well. It's one of the best gauges of inflation. Usually the consumer feels it most at the pump. Oil prices go up, gasoline prices go up, and I had a report that was written by Goldman Sachs that said oil is your better indicator of inflation, not the gold market. So gold tends to work well in stagflation. That's where you got the declining growth, the rising inflation, the Fed is handcuffed. But when you get real inflation coming on, it's usually the energy markets that are leading the charge. So oil prices here, they are rising here after their biggest weekly drop since last year. You got basically some headlines to watch. The sanctions on Iran and Russia. I think it was on Iran where they were talking about taking them off of SWIFT. And then also with Middle East tensions rising in Israel here, I think that is causing a little bit of this relief rally in the energy market. So you want to watch China demand figures. You want to watch the SPR buying any kind of announcement like that. And then the actual implementation of tariffs, not Trump just like threatening tariffs, taking them off, this and that. So he hasn't really implemented anything. So, and then you want to look at U.S. oil production, OPEC Plus. They've made their announcement. I think that they really want to get prices back up, especially Saudi Arabia, up over $80 a barrel on that Brent crude oil. So we're going to want to watch that. So the storage balances, they should be pretty supportive throughout the year. But oil prices, I think we've got this price band where it's like 65 to 75 at the moment. We'll see if we kind of break out in either direction to cause a new price band. So a lot there to discuss here in the markets here today. You guys got any questions, give me a call. I'm still demoing the house. Freaking hit a piece of drywall, ricocheted, clipped me in the chin here yesterday. So not only markets taking out the chin, I'm taking out the chin with a piece of drywall. So but you guys got questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading, go get them. Remember, risk management, these types of volatile markets. Take care, have a good weekend. Bye-bye.